At this point in time, I'm actually almost at my most bearish
Hmm.
point of this market cycle based on what I'm seeing in the markets, based on, and part of this is human psychology too. We're seeing this resumption of this kind of free spending environment where investors are willing to pay up for stocks, pay up for crypto, pay up for anything, ask questions later. That is not a healthy sign. It doesn't tell us the bottom's here. It tells us that we have another leg lower to go.
Hey guys, welcome back to Library of Wealth. Renowned technical analyst and crypto trader Gareth Soloway shares an in-depth analysis of Bitcoin's latest price movements and what we can expect in the next few weeks. Bitcoin has recently experienced a sharp correction, causing it to give back some of its impressive gains. On Tuesday, the cryptocurrency briefly soared above 28,800 before dropping back down. Other cryptocurrencies have also been impacted by the current market downturn, fueled particularly by growing economic uncertainty in the United States. Soloway believes the next few weeks will be critical for Bitcoin and the entire digital asset space. Let's get right into the latest interview with Gareth Soloway. Before we dive in, don't forget to hit the like button and subscribe. It's a tremendous help for the growth of the channel and helps us bring you more content just like this.
The bottom line is the Fed is kind of the culprit here, right? They've kind of induced this feeling that, from the past 12, 13 years, that they'll always come to the rescue, because every time the markets have had this hiccup, when inflation has been sub 2%, they've come out with quantitative easing or lowering rates. For me, I'm not convinced yet that the winter is over yet. I think it's almost been too easy of a winter in respect to, yes, we've seen big declines, but we still have a massive amount of crypto coins out there that have no use case, no real reason to be in existence, and they're still in existence, and they're still getting pumped on a daily basis, right? In fact, recently, Pepe and all these other ones, it's just flooding the market and going up ridiculous amounts. So I'm a little concerned about that. To me, the 30,500 level continues to be the level on the charts that I'm keeping an eye on. So if we just take a look at the chart right here, right?
Yeah.
And we just kind of we can see that the Bitcoin chart ran up to that 30,500. It collapsed back on it, below it. We've now come back up a little bit because of the fear in the banking markets and so forth. But for me, this level is the key level, this 30,500 level. Can we get through that? If we do get through that, then I actually think the low is likely in on Bitcoin at 15,700. But again, I would just caution people at this point, you look at what Bitcoin has gone up and you look at the 2018 and 19 bear market, it had bigger rallies than this in percentage terms during that bear market, and people again seem to forget that. So don't be fooled. I've been through many bear markets in commodities, in the stock market, in crypto in my trading career, and sometimes it turns out to be the lipsticks on the pig here, and it could still roll over and head lower. So I still think there's a chance for 12 to 13,000, maybe even 9,000, but again, that 30,500 level is the level I'm watching. We do get through 30,500 and we hold above that level for a few days and really establish it, then I think at that point you start to say the probabilities highly favor that the low is in at that 15,700 levels. And we remember in the 2018-19 bear market, we actually did dip back down to 3,500 again at some point. I think that was during the COVID collapse. My biggest fear for Bitcoin is not that, it's going to get outlawed. That's not really an issue for me anymore. It's more that if we do see the declines in the equity markets that I expect, if we're looking at 20, 30, 40% downside potentially over the next 12, 18 months in the stock market, how does Bitcoin, which still is being traded as a risk asset 80% of the time, how does that hold up against that? If you see panic, and we saw this yesterday, we saw the stock market declining back down after a gap up on those Microsoft earnings, and Bitcoin was up big early in the day and then gave it all back by the end of the day. So that's my fear, is that if you're going to tell me that the S&P is down 30% in the next 12 months, how is Bitcoin not down on that and potentially down significantly? I think the Fed is still focused on not becoming the Paul Volcker of the 2020s, if you will, in terms of being too loose on monetary policy, maybe getting too dovish too quickly, and then letting inflation roar back. So I think we will see 25 basis points. But again, this should give investors concern, because if we're already seeing economic news, and again, we saw the jobs data a month ago or so starting to come in a little bit lighter than expected. Now GDP is showing a marketable decline from what was expected. You have to start saying, okay, is this an indicator that we are headed towards that recession the Fed's calling for in the second half? They're saying mild, and I think we talked about this before, but they said transitory, and look at what the outcome was. So I don't really trust them when they say mild for a recession. So I'm still in the camp that we're in for a very sharp decline in the markets. And the reason I say that is twofold. Number one is that it's almost going to be impossible for the Fed to loosen rates to the amount that will be needed to get massive amounts of money to flow back into the equity markets and push us to new all-time highs. So again, if we think about it like this, right? How much did Powell raise interest rates from the start of this hiking session or season? And ultimately, how much is the market up or down in that period? And yeah, we've kind of stabilized, we've inched up a little off those lows, but the Nasdaq and the S&P are still well off their all-time highs. So the question is, how does he come to the rescue of a market when inflation remains north of 3%, 4%, 5%? And even again, I still think inflation is going to continue to come down. I just don't see it getting back to 2%, where he can marketably drop those interest rates back to the levels they were at pre-hiking process. And
could he be like 3% inflation is good enough? 3% becomes the new normal?
Well, moving goalposts is what the Fed does best, right? We know that. So yes, I think that eventually, right? So think about this. If they call for a mild recession and it turns out to be a very bad recession, and we have 3% inflation, I would absolutely agree that at that point, the Fed will have to come out and hike rate or lower rates substantially. The question is, at that point, what is the discount in the stock market? I mean, if we see, again, a deep recession, what are the earnings looking like for companies like Apple? What about, Microsoft that just reported that was very good? But if we do get in that deep recession, where are those earnings? Where's that multiple for the S&P 500? One thing I'd love to show you guys, and again, this is going into some charts here, but this is one of the most powerful things that honestly has me somewhat spooked, is that if you look at this chart of the S&P 500 that I have up, look at the run-up we saw from COVID, the decline, and this sideways consolidation. And then what I'm going to do here is I'm going to throw up this chart, which is the market psychology chart. And in this chart, right, you see the same incline right here from COVID all the way to the highs. If you look, you had the optimism, the belief, the thrill, the euphoria. Then you had the decline, and then look at what this chart is showing you, and look at it in perspective with what the S&P is showing us. And it's almost identical, like literally identical to what we've seen in the market. And if we look at what comes after this complacency period, which I argue we are in, absolute complacency, you get into this big downward move, anxiety, denial, panic. It's the cycles of a bear market. And again, to me, that is unbelievably scary when you look and compare it to this chart here and how accurate it is in falling. Remember what we just looked at. If I put an arrow in here, this is your next move in the market. The biggest move of the bear market is likely on the horizon. I have a downside target for this year of 3,300 on the S&P, so that is pretty substantial considering we're almost getting towards the halfway point of the year, and I do think we get below 3,000 in 2024.
Gareth Soloway believes that the next sell in Bitcoin may come from issues like an economic recession in the US that could lead to a substantial collapse in the stock market. This could cause panic selling in Bitcoin and other risk assets as people try to cover margin calls or bring money into their stock portfolios. Soloway continues a long-term bullish stance on Bitcoin and cryptocurrencies in general. He emphasizes the importance of diversification and reinforces the idea that during a banking crisis, the need for cryptocurrency, specifically Bitcoin, is a crucial asset to have. What do you think about Gareth Soloway's prediction for Bitcoin and the crypto market in the coming weeks? And how does this impact countries that hold the US dollar as their reserve currency? Comment down below. Thanks so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.